All right, Mark. Marc Faber, for everyone listening. Mark, thank you for being here. You're back on the pod today, sir. I'm very much looking forward to chatting, as I plan on asking for some more specifics here than you typically get asked, go a little bit deeper than that, because I understand you're not very bullish on very many assets out there, but I want to see which ones you are bullish on, or what you are doing with your own money, kind of understand what your general market analysis is resulting for in terms of, again, what you're doing. And I also want to know what you have to say to people who say that you've been too bearish for too long, or that you've been wrong in the past. So I think it's going to be an interesting conversation here. And then I also have a CEO barbecue waiting right after our interview, with a company that operates in Papua New Guinea, a place that I haven't spent too much time in myself. Apparently a volatile but an interesting exploration jurisdiction. So this is not a short Real Money Talks episode. It never really is, but it'll hopefully be interesting until the end. So thank you to everyone watching. And again, Mark, thank you for doing this, because last time we spoke was almost a year ago. A lot has changed with the world, maybe for the worst. Was it enough to turn your bearish view on the global economy into a bullish one, though?
I don't think that the global economy deserves to be looked upon very optimistically. There's very little growth, if any at all, because the GDP figures that are published by governments are meaningless, and I explain why they're meaningless. Depending on the rate of inflation you are assuming or calculating statistically, you will get totally different results. So assuming someone says in the long run, the US economy grows at 3% per annum. Okay, but if the inflation is 2% higher than what the government is publishing, then there is not 3% growth, but maybe only 1%, or maybe in some sectors, negative growth. You understand? The figures that the governments are publishing are all based on statistics that also the government is publishing. And I personally think that one of the qualities or virtues of politicians is that the moment they become politicians, they're becoming liars. They lie about everything. So why would they lie about everything but not about statistics that they publish? Give me one good argument. So my view is, if we look at the global economy and we look at statistics that are not, cannot be faked a lot or cannot be massaged a lot, but real statistics, say car sales and consumption of individuals in a shop, and the announcement by the corporate sector about the spending habits of people and so forth and so on. And you have to go out of your room and maybe observe a little bit instead of watching the telephone all the time. Maybe observe the traffic at the station, or the traffic at airports, or the traffic in duty-free shop, and. But if you look at that, then my impression is that, and I have statistics about this to kind of prove the assertion. My view would be that since 2018, 2019, in real terms, the economy in the world has not grown, but actually still somewhat below the level of 2018, 2019. And if we consider growth as being an increase in the standard of living of the typical household in the world, then there has been no growth. The typical standard of living of individuals in the world has been going down, with maybe one exception or two exceptions like India. But in general, the cost of living increases in the world of households has exceeded their salary gains or their earnings.
So what do you, I suppose let's maybe dive a little bit deeper into this. Like, what do you do with this information? Because although I obviously appreciate hearing experienced views like yours, Mark, I often wonder, what do I do with this information, with this knowledge? So how should I, an average Joe who's not financially nor intellectually where he wants to be, how should I not only protect myself from what's to come on the back of what you just told me, but also attempt to make some money on the back of it too?
Yeah, I would switch off CNBC and all these media outlets and the major newspapers, because what they're publishing is what the government is telling them. And most of the articles and the media reports are completely wrong. They're not corresponding to the economic reality nor the political reality. And that is the first step I would undertake. And number two, I would say to myself, well, if there's no growth, the governments will continue to print money to make it look like growth, because, you can just essentially create fiscal deficits. In other words, the government has a deficit. They spend more than they get into the kitty every year. That is then financed by the central bank that issues money to purchase the bonds that the government is issuing. By essentially spending more than the government collects in tax, they can give to every household a certain amount of money, which they've done. And they can subsidize certain industries, which they've done as well. So let's say an individual, a private entrepreneur, he might not build a factory, but if the government comes and says, well, we'll give you $1 billion to build the factory, then the entrepreneur says, okay, I get $1 billion from the government, I build the factory, even though the factory may never be profitable. So the government can play all kinds of games and give a wrong impression about the true health of the economy. And what the individual should do with that statistic, he should be very careful about investing based on strong economic growth and economic recovery and so forth. And we've had some figures recently. Well, we even had figures where the government admits that it overstated employment gains and so forth and so on. So equipped with that, the individual can decide, well, I buy more stocks on growth expectations, or I buy more bonds on recession expectations, or I avoid the dollar and so forth. I mean, each individual has to interpret the news himself. Exactly doing nothing should not be the job of an individual.
Yeah.
You are typical people who believe the government should do everything for the households. The government should tell you to buy stocks or sell stocks and so forth and so on. This is not my view. My view is that you have the information. You know the government is lying, and then you take your responsibility and you act upon it. Now, it's not my job to tell you how you should act, but my job is to do what I should do.
Let's figure out what you're doing then in that case. I made a list of asset classes here, and I want to quickly run through them, maybe kind of in a lightning round where I say the asset class name or the asset name, and then you tell me if you personally are bullish or bearish without telling me what I should do, just kind of figuring out what you're bullish or bearish on. Gold and silver, I assume you're bullish, but what do you say?
Yes, I think the paper currencies will continue to depreciate in value, and the currencies which cannot be printed, such as precious metals, they will appreciate relative to the currencies that can be printed. But I've been saying that for the last 40 years. It's nothing new. And I'm not telling your viewers to run out of the door now and go and pile in and put all their money in gold and silver. You understand? It all has to do it in a measured way. And the measured way is also to look at what is my personal wealth situation. I have a lot of gold and silver, but I'm fully aware that gold and silver doesn't give me any income. I have no income. I have no cash flow from holding gold and silver. So each individual has to decide how much does he want to have in gold and silver.
I agree. And there's absolutely no guidance that we're giving out here. I'm just kind of picking your brain. Again, I appreciate the years of experience there. What about platinum and palladium? Bullish or bearish?
I'm also positive about platinum. The palladium situation, I don't know well enough, and I don't use it. But I also have platinum. It's the only precious metals that is still very depressed.
And that's really from a precious metals perspective. You're not seeing it as an industrial metal that's used for catalytic converters.
Yes, I see everything as every commodity has several uses. So we have to analyze it from different perspectives. But you asked me whether I was bullish or bearish. So I tell you I'm bullish on platinum.
You bullish or bearish on oil, coal, and natural gas?
I think that oil is inexpensive at this level. And I think that the world is underestimating the future demand for crude oil. So I would be rather long crude oil than short. Number two, we can observe the positions of participants in the commodity futures market. In the commodity futures market, we have large speculators and small speculators, and we have commercials. The commercials are people that are involved, say, in the oil trade, or they are oil producers. And the speculators are mostly, say, hedge funds. Now, the commercials, they are now very light on short positions in the oil market, which means the professionals, the ones that are involved in daily oil transactions, like oil companies, they think the price is now relatively low. And I'm not a particularly smart guy, so I prefer to go along on the side of well-informed people. And the commercial traders are not usually, I'm not saying in all cases, but usually better informed than, say, the public, the small speculators.
Well, I don't like disagreeing with my guests, but I'm going to have to disagree with you or not being the smart guy that you say they are not. That seat is reserved for me.
Let's go to the next question.
Copper and battery metals, bullish or bearish?
Well, I'm happy you're asking this question because I want to make something clear to the viewers. In a money printing environment, the central banks print money. And I don't want to give a speech why central banks have only one option. It's politically in a democracy, democracy is a failed system because the voters, they like that the government takes measures that actually lead to inflation. They don't like inflation, the so-called consumer price inflation, where food prices go up, gasoline prices go up, mortgage rates go up. That they don't like. But they like the inflation of assets. When, say, copper goes up, or when house prices go up, when their books, the value of their books go up, or diamond prices go up, or their paintings which they bought last week at an auction, that they like that this goes up. But they don't like when the food prices go up and when their budgets at home, when the housewives pay attention to how much they spend on food and on necessities of life. Whereas what is not a necessity, such as art and collectibles, stamps and badges and baseball cards and so forth, people love that to go up in value. Now, the money printing lifts assets, including commodities and gold and silver. But a weak economy is a headwind for the demand of commodities. So if China is in recession and doesn't recover, the demand side for copper is not going to be very good. So I want to explain. You have two head and tailwinds. They're coming against each other. And it's difficult to determine which will prevail. My view is that first, the demand side will disappoint the prices of commodity holders, that, the demand is disappointing and so forth. And I also like to mention, in the case of precious metals, an important point. When people are squeezed financially, they have to sell something. Usually they will not sell their homes because they live in their homes and it would lead to a loss of income and so forth. So that they'll keep. It's also a loss of face because the neighbors can see, oh, my neighbor has to sell his house, and they joke about him and the children joke about them, and then. Usually they will also not sell their cars because there's lots of face. Again, compared to the neighbor, you have to sell your car. Neighbors will immediately say, or the local stores, what, this guy must be in trouble, he has to sell his car. And in poor countries, they will usually not sell the houses, the cars, and the motorcycles, because they need the motorcycles in poor countries to bring the children to school and take them back to home. So these are no-goes. But in poor country, a lot of people, in a country like Vietnam, every family has some gold. So in poor countries, when the price of commodities goes up and the economy goes down, they sell the gold. That's why, in my view, the gold should be higher at the present time based on money printing, but it's not, because there's a lot of sellers in the gold market.
Does that, what you were just telling me about copper, how does that relate to battery metals at the same time? Do you expect demand for electric vehicles to also be dropping given your bearish view on the economy?
I mean, I think this whole electric car business is a complete farce. It's a complete joke. Yeah. I would never buy an electric car. I want a car with gasoline or coal or anything. Now, someone will say to me, yeah, you're one of these people who create CO2 emissions and so forth. To this, I respond, yeah, maybe. But please prove to me that because of CO2, the climate goes up. Please prove it to me. So we don't know. A very prosperous time for nature was when the climate was much warmer.
Yeah. Yeah, it is
not
true.
For the ski resorts, that I can guarantee you, not for the ski resorts. But for, say, the dinosaurs, they lived in hot climate.
Well, on that topic, I asked you about energy when I asked you about coal, oil, and natural gas, but I purposely let out uranium out of that because I find the fundamentals there are different. What do you think? Bullish or bearish on uranium?
Well, the fundamentals of uranium, with the American State Department in power, who wants a war everywhere in the world. Whenever they see a nail, they have to bring a big hammer and hit it down. So with that in mind, the demand for uranium will go up. Then we have the really dumbed down green communists in Germany and other countries. They talk about climate change, but themselves have no clue about what causes climate change. And we don't know precisely what causes it. But the point is this: all these clowns will be out of government in a little while, because like in Germany, this is now a really good example how a country is not destroyed by an enemy. The country destroys from within. They have decided to essentially commit economic suicide. That's why they have the German government consisting of Scholz, Baerbock, Habeck, and more, People who are completely incompetent, but are interventionists. You understand? If you're incompetent and you don't do anything, you're actually a good economist because you don't interfere into the economy. But the worst is to be incompetent and take the wrong fiscal and other measures into the economic process.
So what does that result for in uranium? More demand for nuclear, higher uranium prices? Is that how we see it?
Well, I think we'll have higher demand. Whether the prices will go up or not, I'm not sure. And I'm less interested in the prices than in the stock prices. I think the stocks had a good move. They are now correcting. And as I told you, there is the demand being stimulated. I mean, the commodities are driven up by money printing, but the demand side is maybe not as strong as the analysts project. I'm not an uranium analyst, and don't ask me all these specific questions because I don't know. Maybe you can find an analyst who knows everything, but I'm not someone who knows everything. I'm sorry.
If you find them, send them my way. I don't think anybody does. Money printing, bullish for real assets, though. Does that include real estate for you?
Well, in what country? You're asking, are you bullish about stocks? Which there are stocks in Thailand that are cheap, and the stocks in America that are expensive, and the stocks in I don't know, in Kazakhstan that may be cheap, and the stocks in Brazil that are expensive, and so forth. So we have to be very specific, and the same applies to real estate. In general, I'd say real estate in big financial centers is not particularly attractive. There are exceptions. Real estate in Asia is probably more attractive than in the United States and in Europe. But you understand, if you travel the world and you open your eyes instead of watching your mobile phone all the time, you may notice cities like Petra and Venice and Babylon and Nineveh and Rome and so forth, and Venice, and that the cities that were important, and today they are meaningless economically speaking and politically speaking in the world. Meaningless. Now, once you know that, you can deduce that maybe there are some cities that are financial centers today, like New York or London or whatnot, that are one day not going to be doing very well. I mean, you look at Manchester. Manchester was lucky. It was one of the richest cities in around 1830, 1840. And then the manufacturing center shifted more to the US, first to the East Coast, then to the Midlands. In other words, the region around Chicago and the Great Lake districts, and later to California. So we have this rise and fall of cities and the shift in the centers of economic gravity in the world. And Manchester was lucky to have two of the best soccer clubs in the world. But it's no longer a manufacturing center. That I want to stress. And I'm not sure New York will have two successful soccer clubs. Maybe they have two baseball clubs. I don't know. But I'm just saying things will change and new centers of prosperity will come up. So when you ask me about real estate, I think in small villages in Europe, real estate is cheap. And I'm not saying it is written in stone, but you understand, for the last 150 years, the Industrial Revolution meant that in year 1800, 80 to 90% of the population in the world, they were employed in agriculture. And they didn't live in cities, but lived in the countryside. Then there was the flight to the cities, the urbanization process, where the world went from, say, 20% urban population, 80% rural population to 80, 90, 95% urban population. Now, we may have a reversal that could be quite permanent for a long time.
That does seem to be happening when I look at some specific countries in Europe, specifically Eastern Europe. Actually, this would have been my follow-up question to the real estate question. Is like, okay, we're talking, real estate in the West. Have you looked into Eastern Europe? I mean, I know you're in Asia, but yeah, have you looked into what's happening in Eastern Europe?
Yes, we had investments in Eastern Europe and so forth. But now, because I live in Asia and because of my age, I don't want to go and invest in Ukraine or in Poland and travel there every year. At my age, traveling becomes less enjoyable, largely also because of governments that have really messed up airports and security. For a while, if I went through airports, I couldn't even carry a nail clipper. What do I want to do with a nail clipper in an airplane? Only a government official and bureaucrat can be as dumb as that. They serve Coca-Cola cans in airplanes, and they embargo essentially small things for your health, like nail clippers. A Coca-Cola bottle, a can, is a deadly weapon. You squeeze it in half, you have two instruments in your hand, which in each hand you could kill someone easily because the aluminum is very sharp.
Yeah, I feel you on that part.
Every terrorist knows that. But the government officials, they think that the terrorists walk around with the nail clippers.
I have a few other things on here. When you mentioned stocks, I was reminded of, yes, I do want to talk about stocks separately. So what I wrote down is S&P, Dow, and NASDAQ, basically saying the big US indices, bullish or bearish?
Well, I want to revert to the real estate question. I'm basically of the view that property prices in Eastern Europe will adjust upwards, and in Western Europe, they will not go up a lot, except in, say, villages that are very inexpensive, where the government even gives you money to take residence. But on the S&P, I would be in a money printing environment. It's dangerous to short stocks. But in general, the S&P and especially the NASDAQ, and specifically the Magnificent Seven, in my view, are grossly overpriced, and they're also grossly overowned. In other words, every Tom, Dick, and Harry in the world who is a trader is long NVIDIA. Yes. And the other FANG and FANG-related stocks. And as a contrarian, I would buy other stocks and not these Magnificent Seven stocks. And I would essentially be light on the US stock market. I have no investments in America at the moment.
Good point on the contrarian, because that's the next thing I wanted to go to. The northern neighbors. Canada is very mining heavy on their stock exchanges. Is that where your contrarian nature is taking you now?
Well, first of all, I think that Canada is an example where the currency has been weak and where stocks have not done particularly well. So yes, I sort of like mining stocks, but I have had the view for the last 40, 50 years, I rather own physical precious metals than mining stocks. I concede that mining stocks relative to the S&P and relative to the bullion price are extremely low. That I agree. But I don't know. My sense is that, and I own mining stocks, so I'm essentially speaking against myself. But I find that mining stocks are acting horribly as, you know, a group of stocks in the market. They don't really get a lot of momentum on the upside yet. And when the gold price and silver price drop a little bit, they are hit hard. So I'm not sort of very optimistic about mining stocks purely because they're not performing well. But I own some, and I think in a real strong bull market, they'll go up at some point, but it just hasn't happened yet. I'm still waiting for it to happen.
You have a lifetime of experience with mining stocks, actually, Mark. What do you think there's something fundamentally wrong, or is this just part of the cycle? Is the Canadian are the Canadian financial markets broken? I suppose is what I'm asking.
I think the financial markets are functioning reasonably well. You should ask, is Canada broken? Because we have the most idiotic government anyone could dream of. I mean, this is, for me, as someone who is born into a system of common sense and of freedom and of belief in that democracies is the best system, to have someone like Trudeau as a prime minister, it's a complete disaster. But half or 3/4 of the Canadians, they seem to like it. For me, it's hard to believe.
For me, it seems like the government is operating on a how to fail massively in 10 easy steps YouTube video. You've lived through many boom and bust cycles though around the globe, so not only in one place. What would you say the current time reminds you most of on the back of these asset classes that we just went through?
Well, this is a very good question because the government intervention into the economy, and I'm saying this because in the 19th century, when the socialists nowadays, they all called it the robber barons days and so forth and nonsense like that. The 19th century in Canada and in the US brought unprecedented prosperity to the lower classes and to middle classes. Otherwise, please explain to me why so many people moved from Europe and other countries in the 19th century to America. You know, the socialists tend to tell you, oh, it was the robber barons' day where the Rockefellers, the Carnegies, the Dufours, and so forth, they all made a lot of money, and the poor people had to work in factories. They had to work in factories. Everybody was working in factories. Go and look at the photo gallery of, say, Polish or Belgium or French or English coal workers in the 19th century. Go and look at the famine in Ireland. It was disastrous in Europe, and so they went to America, and it was better in America. But at that time, people had to take responsibility for themselves because there was no social security and no unemployment benefits. So you lost your job, you had nothing. But after essentially the Great Depression, these programs came up. And whereas the US had never spent on the federal government, or the federal government had never spent more than, say, 8 to 9% of GDP, by 1910, it started to grow and it accelerated after the Depression, and especially under the bread and the butter and gun policy of Johnson in the 60s. And now most European countries, 60% of the budget is essentially government. So as the government has expanded like a cancer, and as a result of that, economic growth has shrunk. You can ask any entrepreneur in America or small companies and so forth, small businessmen, what is the greatest threat to their business? They will all say government regulation and officials. Incompetent people like Baerbock and like Kamala Harris have no clue. They never worked a day in their lives. Would they know how to run a business? I ask myself, how do they know how to run a government, which is a bit more complicated than to run a bakery? I mean, I tell you, based on the governments we have now in the Western world, I really can't be optimistic. But they may print money and stocks may go up, but they may not go up in real terms.
Good point specifying the Western world, because again, it's something that I also wanted to ask you here. I've been wondering about opportunities in emerging markets, but I fear that their debt levels will eventually catch up with them as well. So can we dive deeper into some of the emerging countries that you might have been looking into recently? And what do you think of their political and economic stability?
Look, I live in Thailand. Now, recently, they had some wonderful articles in papers and so forth that kind of highlighted the fact that Thailand had all the characteristics of being a failed state. I love that, because the funny thing is, Thailand has one of the largest retiree populations in the world. You know, people from all over the world, they come and retire in Thailand. Now, isn't it funny that people from the Western world, from all over Europe, and from the US and Canada and Australia and wherever, they come and retire in a country that is a failed state? Maybe the definition of failed state is wrong. I don't know. In any case, all these articles and then also brokerage reports recently, a very well-known strategist turned very bearish about Thailand and recommended to short the index. And I wrote 2 or 3 reports recently about the Asian stock markets. And I wrote about Thailand. I said, even I can't see from where an economic improvement could take place. But I have to admit, that's what I wrote, that each time I went to a country where even I couldn't see from where an improvement could take place, the stock market right away went up like a rocket. And that's exactly what has happened recently. The market is up 10% in like 2 weeks. If you want to make big money, you must buy things that nobody wants. And optimism is the enemy of the rational investor. So if everybody in the world buys NVIDIA and trades NVIDIA, you shouldn't do that. You shouldn't buy it.
That's the contrarian approach. That's what I suppose Rick Rule says, is that you're either going to be a contrarian or you will be a victim. So far, Mark, I'm getting that government mismanagement is one of your biggest concerns here. What else would you say are other big concerns for you? Like, what would your 3 biggest concerns be for the market?
Well, I, as a freedom-loving person and as an individual, disastrous governments are actually relatively favorable, because, you know, they fail to check on you and you can benefit from their failure. The difficulty is to be in a system where the government is very efficient at collecting taxes. In a system where the government is very efficient at collecting taxes, it's very difficult to avoid taxation.
What else? That's one thing. If you had to make a, I don't know, a top 3 list of Mark's biggest worries.
Well, you see, I live in Thailand before I lived in Hong Kong. I think a concern everyone should have in the world is, say, a social revolution and expropriation of goods. That is a concern. The government, 2 years ago, they locked up people, families in their homes and made it very difficult to travel unless you had a vaccine. So the government can come to you and say, look, either you take this injection that makes you mad or incapacitates you, or maybe they will go further. In any event, or you cannot travel anymore. You understand? This is a very strong interference into your personal freedom. Now, I have traveled the world for the last 60 years or 70 years. I've been to many, many different countries and so forth. For me to stay at home for 2 years is not a problem. I have a large property, I have a large garden, I have many dogs, I have trees, I have a river in front of me. It's not a problem. And in a badly organized society like Thailand, they can close down everything, but they can't close down the nightclubs that are owned by the police force. so yeah, when we talk about failed states and disorganized countries, there are some advantages. But I want to say this, if the governments could do that, they can come to you and to me and say, your property, well, we take it away. This should belong to the government. Your gold, we take it away, it should belong to the government. They can do anything they want. That's why I'm very disappointed by wealthy people who have power. They support the socialists because they know they can manipulate them. But the socialists are very dangerous in every society. I'm just rereading this book. This is one of the best books on capitalism, socialism, and democracy by Joseph Schumpeter.
Yes.
That people should read and study. He writes a very heavy style. I mean, it's not a book to read on the train, and it's very heavy. But in it, he has a speech he gave 6 months before he died, which describes exactly how the capitalistic system leads to socialism, largely because of the academics. The academics, they hate an entrepreneur who has no education and makes $1 million in a month or $1 billion. You understand? An academic, they think these simple people who, through hard work and innovation, without any education, shouldn't become this rich. So that's one reason. There are other reasons that then the wealthy people want to protect their wealth. And in a regulatory environment, they can probably protect their wealth better than in a wild entrepreneurial environment.
That's a very good point. I've written down the name of the book. I'll definitely have a look at that. I'm looking at one of the last points that I made when preparing for this interview, Mark, and some people in the comment section of our last conversation say that your economic predictions have been too pessimistic for too long and wrong too, because the stock market has kept going up, I suppose. How do you respond to those who feel your timelines might have been wrong?
Well, you always have a lot of critics in life. And I was on the panel of barons for more than 10 years. And there are 10 panel members at the round table, Barron's round table. These were among the brightest stars in America, like Pimco's, Bill Gross, and so forth and so on. And someone then compiled the statistics who had the best performance of all the panelists. To answer this criticism, in all modesty, I have to say I had the best performance. And second best was a friend of mine, Felix Zulauf. And we had the best performance by miles. Now, I'm not saying that the next 10 years would have been equally good performance. But to people who say, Mark is always bearish, I'd just like to point out, I was one of the first one to invest in emerging markets in the 1970s, 1980s, in Taiwan, in South Korea, in the Philippines, in Indonesia, in Thailand, when nobody else would invest in these countries. And then in 86, 87, I went to Latin America because I had discovered that in Latin America, because of high inflation, the valuations were dirt cheap. So we invested in Latin America, and Barron's even published a column in 1990, an upturn south of the border with my views. And then in 1991, a friend of mine, he alerted me to the colossal undervaluation of the Russian stock market. And so my friends and we formed, I think it was either the number one, the first Russian fund or the second Russian fund. And it had a super performance. For 10 years, I was a partner, but then I sold it in late 1990s. And then who was bullish about commodities in 99, 2000? So I find it ridiculous for someone to say he's been bearish all the time. First of all, these people don't read my newsletter because they can't afford them. And a characteristic of every industry, a doctor will never speak highly of another doctor who is a competitor. And in the financial sector, people speak badly of each other. And in, if you go to a restaurant or you ask him, what is the best restaurant in your city? He says, mine. That's life. But I think it's important to have idiots in the world in the investment market because that provides opportunities for people who think.
That's a very good
the
note.
The stock market is a mechanism that transfers money from people that have no knowledge to the big boys. You know, like the SEC in America was formed in the 1930s, I think 1932 or 1933. They sold it to the public as an agency that would protect the small investor. That is the greatest lie that has ever been broadcasted. The SEC is an institution that protects wealthy people, Wall Street, against the public, against lawsuits by the public. It's that same. They formed the Consumer Protection Agency. It's a complete joke. It doesn't protect the consumer. It protects big companies against the consumer. But people believe all this nonsense that comes out of the government. The government says something, the people listen. They should switch off. Whenever the government proclaims something, they should switch off the radio, the TV.
Well, I tend to agree with that because they're going to come and watch.
And by the way, give me an asset class that in the last 20 years did significantly better than gold with relatively low risk. And then people never look. They say, Mark has been bearish about stocks. Who was interviewed on March 6, 2009? S&P 666. I said the market is bottoming out today because it was very oversold. And all the others, you know, the super bears, I don't want to mention the names here, but you can look it up. They said the S&P, when it was at 666, will go to 400. This was not my view, because I know the power of money printing, and this is my Bible about the economics inflation. So that is something people should maybe read and understand, that, as you said before, what are you bullish about, commodities or bearish? Yeah, I said there are headwinds. Headwinds is the recession, lower demand, and the tailwind is money printing. But I don't want to defend myself, because I have other things to do in my life, quite frankly. I'm an investor.
Right. Well, look, Mark, I understand that's maybe not your favorite topic. Those are questions coming from the audience, and I think it's fair to ask them. I also appreciate you handling them head on, right? It's a point of conversation. I also do understand that you don't feel like constantly defending yourself, though. You're your own person, and you do your own thing. You're an investor. Oh, for people listening, Mark is also the editor and publisher of the Gloom, Boom, and Doom report. I mean, as the name suggests, he's not very bullish. But there's probably something on your screen right now where you can go and read more about his work and what he does. Thank you for taking the time to talk to me today, sir, and thank you for the overview. I know it's getting late in Thailand, though, so I'll let you drop off now, and I will be moving to my favorite part of this Real Money Talks episode, and that is, of course, the disclaimer, right after which I'll jump over to the CEO barbecue. But there is a warning on your screen right now. I'm calling it a warning, not a disclaimer, although I suppose it is a disclaimer, but it's also a warning. You're obligated to read it, but you're also better served to just read it. Pause the screen, read what's on your screen. By the way, the norm and the expectation in the sector should be, well, the norm is, and the expectation should be losing money in a cyclical sector as this. Most people actually are not going to make it out there, and that's part of it. That's part of it too. Now, in this episode specifically, none of the companies that you're going to see, and you're really going to see only one company, but this company has not paid to be interviewed. Okay, Mark is not paying me to be here. I don't have an affiliate link for him. This company's also not paying me. This was just a request from a viewer, so I got him on. And we'll see where that conversation is going to get us. But that doesn't mean that you should look at this episode any different, because even the companies that are not paying are still likely seeing their participation in this program as a chance to do marketing. So start by understanding that most company communications online, albeit this interview or their presentation on Twitter accounts or whatever else it might be, someone else told you about a stock, that's likely marketing. And although I don't make buy or sell recommendations, because there's a clear conflict of interest, in my opinion, to be active in the market, but also have a business that relies on issuers and then make buy or sell recommendations, many out there will do that. And you should be aware of that inherent bias. That bias is not always going to be clearly disclosed with everyone out there. So it's safer for you to just, anytime you're consuming any type of company specific content, be it written, video, audio, whatever it might be, just approach it with a dose of skepticism and treat it as marketing. We don't give the companies any questions up front. There are no questions off the table, and the companies get no editing rights. We get to ask whatever we want, but still you should understand that there's always going to be a bias with everyone out there. Unfortunately, I'm not a magician. The guests here are not psychics, and some of the CEOs are even normal people. So we don't possess any superior knowledge about what's going to go up, what's going to go down, or what's going to go in circles. Nobody out there does. So no guarantees are going to be made here today besides one. And that is that there will be forward-looking statements in these conversations. These are conversations that are general and impersonal in nature, containing personal opinions and attempts at entertainment, and also hopes for future events that may or may not take place, depending on many different factors, both foreseen and unforeseen. Be aware of that. Be aware of the inherent risk to investing and the increased risk of investing in non-revenue generating companies that operate in the harsh reality of the mining industry. And please talk to someone who knows what they're doing before losing your money, like a professional investment advisor, as well as do more research before taking any decisions by visiting setterplus.ca, where you're going to find the company's official filings. If you don't do that, you're going to be a victim of the volatility in this space, and you are highly likely to lose your money. Again, the disclaimers are on your screen right now. If you don't enjoy losing money, read them, and I suppose be careful out there. With all that said, again, I'm going to be moving on to Papua New Guinea, where unfortunately I'm not going for bird watching, although apparently there are about 1,000 bird species there. Instead, I'll be looking for gold and copper, joined by Tim Crossley, the managing director over at Adyton Resources. The company is listed as ADY, so that will be ADY on the TSX Ventures Exchange in Canada, where an average of about 376,000 shares trade each day, with a 52-week high of 20 cents and a 52-week low of, and this is not a discrepancy, by the way, 1/2 of 1 penny, with a market cap of about $24 million and roughly 207 million shares outstanding. Today, this is an 11-cent stock. There are no warrants based on what I could find out there, but there are almost 5 million options that are still outstanding, making for an almost 212 million fully diluted shares. The last financial statement, which is dated June 30, shows me about $2 million in current assets, basically all of which at the time was in cash and cash equivalents, with very small portions of account receivables and prepaid expenses. No long-term debt was recorded, and the current liabilities were noted at just about $250,000, all of which in the form of account payables. In terms of corporate expenses, the same financial statement shows me that Adyton spent an average of roughly $60,000 per month over the last reported 6 months on what I would call administrative expenses, where about 44% of that spent went toward audit, legal, and compliance expenses. About 20% went into directors and management fees, and about 10% on marketing, with various smaller administrative expenses making up the rest of the cost. That is, again, only the administration spend, and this is typically where I would also give you the exploration spend so that you can do an administration to exploration ratio. But that didn't amount to much over that same last 6 period for Adyton, because the company was doing something else in the meantime, and something we'll discuss later on in the conversation. And field work has really just been restarted in mid-August this year. So the finances will be different from for the current quarter, both from a G&A perspective, but also from a field cost perspective, of course. So as always, I need you to understand that this financial statement is nothing more than a snapshot in time. In this case, it is specifically at the end of June of this year, and it simply shows you what the finances look like on that exact date and nothing more. Finances, though, as I like saying, are a fluid thing, and I could be making mistakes in my reading of them as well. So by the time you're watching this, please go to the company's website as well as setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. For Adyton, that full picture is fully set in Papua New Guinea, and it's focused on 2 projects, actually, one of which is called Fini Island, and the other one is Ferguson Island. Fini Island is where field work is going on right now, so that's where I'll start my overview, I guess. Geologically, Fini is part of the Lihir volcanic arc, which is an area known for, partly for geothermal energy, which I also hope to ask a few questions about, but it's also known for its large-scale gold-copper systems, including a mine that's nearby that carries the same name, so the Lihir gold mine, kind of a famous and not too famous, but definitely a pretty mine with the volcanic mountains in the background. But so typically we'd expect epithermal gold here, but also there is epithermal gold as well as porphyry style copper mineralization in these areas, kind of a layered and typically being influenced by multiple intrusions at depth. I'm not getting too much into the weeds in the geology here, though, because for Adyton, this project is not just a thesis. There is already an existing resource estimate on it, which as of October of 2022 shows almost 1.5 million ounces of inferred gold at an average of 0.75 grams per ton and a cutoff grade of 0.5 grams per ton gold. That resource, though, is mostly based on historic drilling, which focused predominantly on gold, but the company believes there's copper potential here as well. So the next drill program on the asset, as far as I understand it, will be focused on a couple of things, really, one of which is going to be increasing gold mineralization kind of in the shallower parts of the package. But they're also going to try to, as I told you, this is inferred. It is an inferred resource, so they're going to try and upgrade the resource classification, as well as they're going to be exploring for that copper potential with targets mostly based on geophysics, specifically talking about a 3D IP anomaly, which indicates a chargeability in a conductive intrusive body at depth, which could be especially useful considering that most historic holes, as I said, focusing on gold, so they were rather shallow. They were typically less than 150 meters deep, so they didn't pierce the spot that would typically contain copper, again, because they weren't looking for it. But in these kind of systems, that's typically where it would be deeper. And the core wasn't even assayed for copper, so that will be Fini will be a focus of our conversation today because there's a lot to talk about. But as I mentioned earlier, it's not the company's only asset. They also have Ferguson Island. Ferguson Island is actually a two prospect land package that's specifically Gamita and Wapolo, which are essentially sister deposits, both of which are located in in the same geological setting, but in a geological setting that is typically favorable for low sulfidation epithermal gold deposits. Gamita has an indicated resource on it as well, and that's 173,000 ounces of gold and an inferred resource of 340,000 ounces of gold, while Wapolo has only hosts an inferred resource of 200,000 ounces, with both using a cutoff grade of 0.5. But again, Adyton believes both prospects are open at depth, down dip, and along strike. And their target for Ferguson Island is actually 1.5 million ounces of gold. So there's a lot of work to be done here. Exactly how they are going to attempt to get there will also be part of the discussion later on. But those two are currently still under a joint venture agreement, by the way, with East Vision, where East Vision has committed to spending almost $10 million to earn a 50% stake in those two assets. If, and this is an important but if they can fund the feasibility and permitting of the project, essentially meaning they can bring it to a shovel-ready state. This 10 million, well, it's actually specifically $9.5 million, but this amount also includes a $1 million cash payment for Adyton, split in two parts, and the expected timeline when they signed this contract was 2 to 2.5 years, and the signing happened on May 13 this year. So essentially, they expect this project to be shovel-ready before the end of 2026, which of course is an aggressive timeline, so we'll definitely be talking about it later on as well. But Tim, this is your first time on the CEO barbecue, so obligatory, annoying first question here. Who are you and why should I trust you with my money?
Well, good afternoon or good evening, Antonio. It's evening time here in Brisbane. Look, yeah, Tim Crosley. I guess been in the mining industry since about 1996. I actually joined BHP in the coalfields in Queensland, Australia. Was fortunate enough to be promoted quite quickly to a new greenfield project, of which I was a project director, called South Walker Creek Mine, and I guess that was the platform that I developed my career in BHP right from 9 years in coal. Took that project from literally a greenfield project where it was just a paddock, a pasture paddock where cows are grazing in it, through to a 4 million tonne a year coal project. And I was fortunate enough, I guess, that, and I think it's very unusual nowadays because people tend to get put into silos in their careers. But I was not only was the project director, but I then became the project, the CEO of that business and ran it. So I built it and operated it, which is quite unusual. Normally the builder sort of moves on and goes and builds their next project, whereas I was able to stay on and manage it. And it was a very successful project. Without going into too much depth, I then moved to the manganese business of BHP. I ran BHP Manganese's operation in Australia, which is GEMCO, the largest manganese mine in the world. And then 4 years there, I then moved to the iron ore division and moved on from BHP to then work after running the iron ore division to set up the Roy Hill project for Gina Reinhardt, which was a greenfield iron ore project. After moving out of the iron ore industry, I actually came back to the east coast of Australia and went back into coal and was deputy CEO of a company called Gloucester Coal. Remained in that business until it was taken over by a Chinese company, Yancoal, and then probably made the career move to step out of the big end of town and start doing sort of more of the entrepreneurial type of work, like what we're doing now, being involved in companies that acquire tenements or pick up tenements early and then look to develop and develop and commercialize those opportunities. So I've now been doing that since about 2014, 2015. My main focus and involvement's been with an ASX listed company actually called Maya Resources, which is 100% PNG focused. So we've got a lot of PNG experience now. We've taken 2 greenfield projects in that company from discovery right through to full permitting. So I think that gives us a very solid foundation to do some of the things that I'm doing with Adyton. We know how to get things done in PNG. We know the permitting process as good as anyone, if not better. We've got terrific relationships in the country to enable us to actually achieve outcomes. So I think am I the right person for the job? I would say absolutely. I'm heavily invested as well. I think I'm probably the third or fourth largest shareholder in Adyton. I've absolutely believed in it when the stock was a penny stock and no one wanted to know about us. I was still buying shares, and you don't look at me as just a CEO taking a salary. You look at me as a heavily invested operator, investor, and I think that's my point of difference, to be honest with you. I'm just I'm not here just to take a salary. This is a project and a company that I personally have got real skin in the game, and it's not through sweat equity. I have some sweat equity, but it's through buying stock on the market with cold hard cash, and I think I wouldn't be doing that if I didn't absolutely believe in the assets that we've got.
I didn't see insider ownership noted on your presentation, by the way, and in your share structure. I don't think was on there either. First of all, why? But more importantly, how much of the insider ownership? How much is the insider ownership? How much of that is you personally?
Well, I mean, there's 206. Congratulations on your research on the company and introduction, Antonio. It was spot on. About 206 shares on issue. I think I'm across my controlled entities. I think I've got just under 13 million shares. So about 5%. The chairman's very, very heavily invested as well, Sinton. He probably owns about 12 million shares. So, and the other directors all own stock as well. So I think in aggregate, if you looked at the board, we would be holding, close to 30 million shares out of the 206.
Okay. And that's all. Do you know what your average cost of capital is? Because you said that's all bought and paid for, so there's no founders shares, there's no penny stocks and stuff like that.
No. I mean, are you asking me what my average entry price is into the stock? Is that the question?
Yeah. Yes.
Yeah. To be honest, I'm not exactly sure. Probably around about 4 or 5 cents, 6 cents, something like that.
Okay. Yeah. Fair. Well, I want to talk to you about the unanswered questions here later on as well within the company, but also, as I mentioned at the beginning, there's no large exploration spend over the last period, and you just generally I looked up Adyton resources on YouTube and so on and so forth, and you kind of stopped communicating with the market through interviews not too long ago. What happened there? There was kind of a pause. And now all of a sudden there's a little bit more liquidity in the stock. Yeah, walk me through what happened recently.
Yeah, look, Adyton was listed on the TSX-V in February 2021. We put an MD in, formed a company, created the tenements that made the company. At that time, we raised. The MD raised just under 11 million Canadian dollars, and that money was put to work straight away. We were drilling on Ferguson Island, and when we concluded the Ferguson Island drill program, we relocated to Fenny. However, the stock price did not mirror the exploration success. In fact, it went completely the other way. There was some series of events which probably not really needed to go through here, which ultimately led to that managing director leaving the company and some board members. I then stepped in as I was representing the largest shareholder, Maya Resources, as in an interim capacity, and then moved to a permanent capacity as CEO, managing director. But we were at a period where the market was terrible. I sort of made the decision, and this is around about January 2022. The market conditions were terrible for juniors. There was a lot of blood on the streets across the TSX-V junior sector. So we made a decision to just probably put expenditure on pause, put the company in a sense, into a care and maintenance state, which we did. I was actually very busy also in our ASX listed company. And when I was able to free myself out of that, after we'd hired a team to sort of pick up on one of our key projects, it freed me up to really start to focus on Adyton, and that was around about December last year, January. I had a look at the market conditions. I saw the gold price starting to move, and I thought that this was a really good time to probably re-energize Adyton, because we fundamentally, as I said to you before, Antonio, really believe in the assets we've got. They're great assets in a genuine tier one discovery zone of the world. Around about March of this year, I went to Toronto. We spoke to some brokers and some groups over there. They really liked the package. We agreed to do a small capital raise at 3 cents, which we executed, just a small 1.5 million. Soon after that, we concluded the JV on the Ferguson assets with the Chinese, which you mentioned in your introduction. And they paid their $500,000 commitment fee. And that was really enough capital to really relaunch, get moving, and start doing exploration work again, which is exactly what we've done. So I've just had, we've hired a chief geologist, or COO, Dr. Chris Bowden. Worked in Robert Friedland's company for a long time. Fantastic geologist. He's just led a team of geologists on Fenny Island. They've been on the island for a month, reassessing the opportunity. And in parallel, we're progressing our work with our JV partner on Ferguson. Everything's going absolutely to plan. We're very happy with the JV partner. And as you rightly noted, they effectively free carry us right through to production. The one bit that you probably did miss in your introduction, Antonio, is that once they spend that 9.5 million and we get to shovel ready, they're also committing to provide a soft shareholder loan to the JV to actually fund all the capital of the project. So in a sense, Adyton shareholders do not have to ever put their hand in their pocket to fund the Ferguson Island assets. Sure, we have to dilute at the asset level to 50%, but we now have a fully funded pathway to cash flow. And I don't really think the market properly understands that. It's a really good deal for shareholders.
What do you, when you say you went back to Toronto, as I mentioned that part of your administration spent was still marketing. Do you plan to going back to the market now that you're kind of, not kind of, but you're active again? You're going to be exploring again. Are you going back to marketing? Are you going to start doing conferences? What are
Absolutely.
you going to do? Yeah.
Yeah, absolutely. I did the Ontario conference the other day. We had one of our board members present to some lunches in Europe over I guess that was July. So we'll be back active marketing. We've already started some sort of internet marketing as well. I intend to go to Beaver Creek conference. So yeah, all the things that we need to do to get the name out there and understood. Road shows, we'll be back into it because, as I said earlier on, in a way, we've been in a dormant state for 2 years, since sort of December 21, January 22, right through to, January 24, the company's been in a care and maintenance position where we've just done our, maintained our tenure position, maintained our minimum expenditure so we don't lose our tenements. And now that I've freed myself up, I've been able to pick up an excellent geologist. We're going full steam ahead. We want to see those Ferguson Island assets producing gold and silver concentrate in 2.5 years' time.
That is an aggressive timeline, and maybe you can walk me through the timeline on what you exactly plan on doing, because you say full steam ahead. What does that mean? Kind of, a timeline. You're currently doing field work at Finney still. What comes after it? When is it? When do you have news? Just kind of walk me through the next, I suppose, 2 years if you have that in your head.
Yeah, look, the timelines for those projects are quite different. I mean, the Ferguson Island projects are advanced exploration assets. They're ready to take into development. Wapolo mine, remember, was a gold mine in the mid-90s. So it's kind of a restart of a gold mine that failed back in the 90s. It failed due to gold prices, and they probably got some of their metallurgy wrong and didn't have the balance sheet as a small company to survive. So Wapolo is in effect like a restart. Gameta is greenfield, but they're close to each other. They're only 30 kilometres apart. So what that looks like over the next 24 months is get back on the ground with some drill rigs, do some infill drilling, get your conversion of inferred to indicated resources, redo your mine plan, and then finalise a feasibility study. And once in parallel to that, do all your landowner consents and landowner mapping work, and then submit your mining lease application. That's a key important point where you submit your ML application. Now, from our experience in our ASX listed company, we've been able to get an ML granted in 12 months. From the application date to the granting, it's been 12 months. So I acknowledge you mentioned those are aggressive timelines, but they are timelines that are deliverable based on our experience in PNG.
What about Finney? Again, you're doing groundwork there. What are you doing? When do you go back to drilling?
Yeah, so Finney's literally hot off the press. Chris and his team came back from PNG on Saturday. I was back 2 days earlier. Next steps there. Process that, Chris collected, probably a couple of hundred samples. We need to process that. We're looking at doing some aerial magnetic survey and then getting on the ground drilling. Probably, given where we're at, I think that's more likely a November timeline, late October, November, to be on the ground drilling again. And what we'll be doing there is we really want to focus on, one, expanding the existing resource, but also really trying to understand the copper and to push into the area of the resource that is under some volcanic cover, which has actually had almost no drilling in it at all. We also want to look at two other highly interesting prospects that Chris identified, one called Dalmargle, where you've got like a porphyry style intrusion, and also at the south of the island, there's an area of interest there where some historical drilling not only hit gold, but also terminated quite a few holes in 0.3% copper, which need to be followed up. So Fenny's a really interesting prospect for us. It's not a classical Lihir epithermal. The current resource area probably is more classical Lihir epithermal, but what's driving the copper in the system is what we really need to understand, and how contiguous and continuous is that copper. Because right now, our resource is reported without any credits for copper at all. And anecdotally, just by the relationship that we've observed between copper and gold, we would probably have about a 17 to 18% increase in our gold equivalents if we included the copper credits in there, and that's without doing anything. So look, what are we looking at doing? I think we'd want to be looking at targeting an 8,000 to 10,000 meter program on Fenny. We want to give it a really good shot, and I think that drill program will demonstrate that we've got definitely demonstrate an expansion of the gold resource, but we all believe it'll demonstrate that we've got a very serious and commercializable copper resource as well.
I do want to talk about that. Just before I get into it, you said you want to go there the later part of this year. Maybe you can talk to me about exploring in PNG as a whole, seasonality related, rainy season, all these things, but also just permits. Are you permitted to do all that work? Are the locals happy with you, just kind of as a whole?
Yeah, look, absolutely. And I personally went to Fenny Island for the first 5 days of Chris' expedition there. He was there with 2 senior PNG geologists and a field assistant. But the main purpose for me going there was, 1, to introduce him to the local landowners because they know me from previous visits, and 2, I spent I did 5 awarenesses at 5 of the key villages, and we got absolutely unanimous support to continue our activities there. It was fantastic to see the support. So we're very confident that we've got the support of the local landowners. We're very confident we've got the support of the provincial government and the regional member. In fact, he went over with me. The Honourable Walter Snowbolt, who is the parliamentary member for the Namatanai region. So it's his constituents. So that side of things, very confident. We're in really good shape, and it's one thing that you've got to make sure you're on top of in any country, but particularly in PNG. You know, all the land is customary title still, so it's not owned by the government. It's not a lease. You have to be dealing with those landowners, and so very, very, very positive about the reception and the support that we've got there. And we'll be doing exactly the same thing on Ferguson Island, except on Ferguson, where it's not just about an exploration program, it's about developing a mine. It's now about developing a mine.
Is it seasonality related?
Oh, sorry, I missed that part of your question, Antonio. Look, not really. I mean, you know, it is pretty wet in both locations a lot of the time. That wouldn't, you know, we wouldn't sort of target to say, okay, we're going to try and avoid the wet season. So we would drill any time on both Ferguson and Fenny Island. And the advantage that we've got, and this is a really, really important advantage that people don't understand. We're on islands, so our logistics is just literally a large barge turning up, dropping its bow door onto the beach and walking your equipment off, and you start drilling. The deposits are literally no more than 10 minutes away from the beach, and you can start drilling. So you don't have any of this complexity of, you know, the highlands where you've got a helicopter equipment in. It's incredibly expensive. You've got to potentially truck through treacherous roads. It's so much easier and simpler, and you don't have any complexity with landowners on your logistics supply line because it's over the water. So there is no jurisdictional ownership. So the only people that you really have to deal with are the landowners on the island where you're drilling. Whereas if you were drilling, say, in the middle of the highlands and you had to cross, you know, 100 kilometers of, you know, old logging tracks to get there, you'd need to be dealing with all the landowners on that track up to where your deposit is. Right. So it's a much bigger footprint and adds quite a lot of complexity into your landowner negotiations in those circumstances, which we don't have.
I want to go back to talking about the asset, and specifically you looking for copper. Why were those holes never assayed for copper in the first place? You know, you think they would want to do that?
It's an extraordinary situation. I actually rang one of the previous explorers and asked him, and he said, "Look, we were just so fixated on finding the next Lihir, and I was." You know, money was tight, and you know, in a sense, we were trying to save some analytical costs. But the early explorers was so fixated on sort of trying to find this really ultra shallow epithermal deposit that they didn't even analyze for copper, and in many cases, did a lot of the drill holes were air core. I mean, it was in a way, a lot of it was, there was a lot of wasted money, ill thought out and wasted money. And the funny thing is, when you look at a cross section of Lihir, and sort of draw some comparisons to our Fenny project, even Lihir, they didn't hit the ultra high grades until they drilled sort of below 150 to 200 meters. You know, I can show you a section of Lihir, Antonio, which shows that any drill holes that were sort of less than 200, or certainly less than 150 meters, were generally less than a gram, which is exactly what we're seeing at Fenny. So, you know, it wasn't until Lihir started to punch some deeper holes, sort of plus 200, 250, 300 meters, where they really hit these incredible grades, which, you know, is you know, now part of one of the greatest gold mines in the world. I think Lihir is the 4th largest gold mine in the world, producing 700 to 1 million ounces a year. It's just it really is an extraordinary deposit.
What do you? So it wasn't. Why I'm asking it that way about why they didn't assay for copper is because I was thinking about metallurgy. So it's not because of there's a challenging metallurgy or something like that. They were just really focusing on gold at the time.
Correct. Yeah.
Okay.
Correct.
What about that gold? I mean, you say on here that over $20 million has already gone into Feeney, and that's not inflation adjusted, I don't assume. So it's basically a lot of money, more than your market cap today, actually. Yet the resource never moved beyond inferred. How come?
Well, I guess the first point is that our company is the first company that actually went to the took the initiative to actually get a resource geologist to look at it and basically release a 43. It was originally done as a JORC resource, but then reanalyzed and looked at as a 43101 resource. So that's one point. The second point is a lot of those shallow drill holes never even hit any resource at all, because what people didn't really understand the geology at the time was that when the original in the resource area, I'm speaking of the resource area, I'm not talking about Dalmargle or some of the other opportunities in Fenny. A large part of where the resource is and the mineralizing event that created that resource is now buried, because after the mineralization events, you know, millions of years ago, there was a subsequent volcano, which then buried that landform. And the depth of cover varies from 0 up to probably 70 to 100 meters. So any shallow holes that didn't push through that tephra cover were never going to hit mineralized ground anyway. So it was kind of wasted money. Once that was better understood by work done by a geologist called Dr. David Lindley and some of the previous explorers, it clearly became evident that if you actually want to try and extend or grow the resource, you're going to have to punch holes well through that cover and you know, probably 300 or 400 meters under the cover. So the program that we did with Adyton back in 2021 did two things. One, it did a couple of confirmatory holes right in the existing resource where there is little or no cover, and reconfirmed the grades and the extension of the resource. I think hole 1, for example, was like 250 odd meters at about 0.8 grams. It was a pretty decent hole from surface. But then what we did was we relocated the drill about 400 meters to under the cover, where we estimated at the time there was about 70 meters of cover. That was drill hole number 4. As soon as that drill hole number 4 hit the interface between the tephra cover and the original mineralized surface, bang, we were into 0.3% copper, 1.1 gram gold for just under 40 meters. And then we hit this massive sulfide of 5.2% copper, 1.6 gram gold for about 6 meters. The copper then tended to die out. There is copper further lower, but the gold then continued right down for about another 300 meters. It's in and around that hole where we will definitely be focusing quite a lot of our next drill program, because we think that's where we're going to get the true extension by depth and longitudinally in a northeasterly direction in this mineralized zone where you know we think we'll see deliver a huge expansion to the resource, not only gold, but also be able to demonstrate that there's a contiguous and continuous copper mineralization associated with it as well.
And that's when you want to do an updated MRE, then I assume.
Yeah.
Okay.
Yeah.
What's your timeline? What's the timeline for an updated MRE?
You know, if we started drilling in November, it's going to be a 4 to 5 month program. I think you'd be looking at a mineral resource estimate sort of Q2, mid to late Q2 next year.
Okay, so it's still relatively fast. I was actually looking at some of the recent geophysics that you did on the project, which showed relatively complex tectonostratigraphic blocks and potential again for multiple intrusive events influencing the package. You don't think that's going to set your timeline back in any way? Because I mean, it sounds like it's getting more complicated than maybe I'd initially thought.
I don't think so. I mean, unless there's you know, if we do decide to push on with this drone magnetic survey and that throws some curveballs out of us, I don't see any delays. I mean, I think at the end of the day, the truth is in a drill rig, and I think, you know, one can. I won't, you know, mess around's the wrong word, but you know, you can mess around and do a lot of other non-intrusive type work. And hope that it helps you vector into where you want to get to, but the ultimate truth is going to come from a drill rig.
You do want to twin some of those holes, I think, some of the historical holes, or I read that.
Yeah, and that's why we did those holes 1, 2, and 3 in the original program. They were effectively twins, and they obviously confirmed you know, the extent of the mineralization. I mean, this is not a small mineral system. You've got 250 meters of continuous 1 gram or just under a gram gold. It's a big mineral system driving it. What we're now looking for is where's the source of the gold and where's the high grade zones of the mineral system. That's what we're looking for.
Are you going to be including so you're including gold and copper, but are you going to be including silver in the updated MRE too?
So I mean, that's a good question because it's not included in the MRE at Ferguson, and silver's you know, in terms of the ratio, it sits in the Ferguson deposits at around about 2 to 1. So for every gram of gold, you're getting about 2 grams of silver. Now that's not a lot, but it's not. It doesn't feature in our MRE. We don't include it in our credits. So that's straight away an upside for Ferguson Island. Fenny Island's not showing much silver, but we'd certainly look at it. You know, molybdenum's another metal that it could be there. So yeah, I mean, we certainly any payable minerals will certainly get looked at.
Does that mean you're going to have to do some met work before the updated MRE too then?
No, not for the MRE we wouldn't, but we may do some met work post or as part of or in parallel to the time we're releasing the MRE.
Okay. How much is all that work going to cost? This is where you tell me what a meter of drilling typically costs you in PNG.
Look, we'd be looking at a drill program that's going to sort of probably cost around $4 million US in that order. Okay.
But so you're going to have to raise money again this year before that drilling happens.
Yeah, we'll need to do a financing to be able to execute that drill program. That's correct. Yeah.
Well, and this might be one last thing on Feeney. It might actually be a good segue into Ferguson. But why not bring a partner before having to do a financing again?
Look, very good question, and we'll look at all options around how we might finance that, whether it's through a strategic partner, through a conventional placement. I mean, what I can say is we're quite advanced in being able to get to a point where I think we'll have something to talk about to the market.
Fair. I'm not going to push you on it because it's really only a couple of months. Then I suppose that I have to wait before I figure out how you want to solve the financing thing here. Let's talk about Ferguson here for a couple of minutes. Well, we've already brushed upon it, but maybe we can kind of recap it. What work do you have to do here between now and when you hope it to be in production? So essentially, well, not in production, but shovel ready before 2026. and not only the work that you just told me about earlier, but again, going back to permits. I understand you're permitted for this work, but actually going into production is I suppose a whole different ballgame. So permitting an actual mine, yeah, talk to me about these things.
Yeah, look, I think there's sort of probably three key work streams, Antonio. One I put in the basket of social license. So one of the key work streams there is to get an anthropologist to actually go to Ferguson and Wapolo and start mapping the land ownership, the rightful and true land ownership. That's important because when you submit your mining lease application in PNG, you have to also demonstrate that you've reached a compensation agreement with the rightful landowners. So to know who the rightful landowners are, you need an expert, an anthropological expert to identify, and they will literally walk with the landowners along their boundaries with a GPS and create a land ownership map. Once we know that, we know who our landowners are, and then that enables us to know who we will enter into compensation arrangements with. Second piece, the second work stream is what I would call geology, which is, it's really about, okay, let's start doing some infill drilling, enable us to convert some inferred resources into indicated resources so that we can get some measured resources, which we would target to have, probably target a minimum sort of 300,000 ounces in the measured category. From that, develop your mine plans, your financial models, and that obviously feeds into your overall feasibility study. One of the, other than the land compensation agreement, the other key step that you need to have completed by the time you submit an ML application, or it actually has to be part of your ML application, is to demonstrate that you've got a bankable project. In other words, it can't just be a back of the envelope feasibility study. It has to be a feasibility study that shows the bankability and the viability of the project. So all things necessary geologically and mining engineering wise to get to that point. So that will include geotechnical studies, tailings placement studies, the resourcing work that I mentioned to you, location of roads, camps, infrastructure, wharfs, etc. That all that work has to be done. And then I think the third work stream is probably around markets and logistics.
You don't have to fund any of that work yourself, though, as far as I understand it. The money from East Fission is going to cover all that.
Correct. And they have a progressive earn-in, so it's milestone based. Currently, they don't have any equity share, but as they reach, it's 3 key milestones. They progressively earn in and up to that 50% position. And if they don't achieve that 50% position, I guess they don't earn their equity stake.
Okay.
Is bottom line. Yeah.
What is that? Because you call it shovel ready. What does that mean? I mean, are you essentially have a 50% free carry until it's in production, or would you have? Well, you would have to cover your part of the capex, I assume.
Well, there's sort of two parts to that question. So the shovel ready piece is really about having a project that is fully consented, fully permitted, and your mining lease is being granted, your environmental permit is being granted, all your landowner consents are in place, and you are now ready to mobilize to start building the project, the infrastructure. Now, the second part to your question was, well, how's that going to be funded? Under the agreement with the East Fission Group is that they will provide the joint venture. So at that point, we would then be 50-50 JV. They will provide the JV with a shareholder loan to fund the capital to build the project at, I think it was an 8% coupon interest rate. What they get out of that is they get a preferential cash sweep, 90-10 split, until the money, their share of the money is paid back, and then we proceed like a conventional 50-50 JV.
Hmm.
So in a sense, what I'm saying to you, Antonio, is that no, we don't have to go and raise any money to build the project. They've committed to provide a shareholder loan to the JV to fund the construction of the project.
Okay. And that's, would you say that's 8% coupon?
Yeah, at an 8% interest rate. Yeah.
Okay. Good. Good. And they can, so East Vision can cover that on their own, like they're not going to have to go find. I'm trying to figure out what the financing risk is here for the project.
Oh, look, they're a pretty big, strong group, you know, from Sichuan province in China. Yeah, a very, very, very strong balance sheet. And that's demonstrated by their existing commitment to PNG. As an example, they funded the Edavu hydro scheme, which is a hydro project, 50 megawatts, just outside of, when I say just outside of Port Moresby, it's about an hour's drive. It's now feeding hydroelectricity into the Port Moresby grid. That was a well in excess of $100 million hydro project. I've been to it. It's slick. It's very, very impressive. So that's the capability that those guys have got. You know, and one of the reasons, you know, we entered into the agreement with them is because I saw their ability to get things done in PNG. You know, building a 50 megawatt hydro project, technically quite challenging, run a river. And they executed that, and it's up and running, and it's delivering electrons into the PNG grid. So, you know, they're a partner that's not just flown into PNG, have no idea about PNG. They've been there for a long time and know how to do business in PNG. So that was extremely attractive for us.
Glad you're bringing up hydro, because I eventually want to, well, I just have one more question, then we'll go talking about geothermal as well. But I have it on my list here, and otherwise I'm going to forget. Met testing on Ferguson. Met testing showed what, 87% recoveries, I believe. What do you think could be doable with more work? Can you get this into the 90s?
Yeah, I mean, I think the recovery we got similar to what some historical work had showed. So look, I'm not sure that we're likely to get higher than 87%, but what I think was very suboptimized was the grade we achieved. Right, we just ran out of samples to continue to optimize the process. So we achieved about a 23 grams a ton concentrate grade. That's where we'd be looking to really look to optimize. We'd want to push that up to as close to 30 grams a ton concentrate grade. And if we can do that and still achieve that 87% recovery, we'd be very happy.
Okay. And that's, you're not going to be doing any additional work this year then on that?
We will certainly be taking some bulk samples to enable more met test work to be done. And I would expect that would be certainly started this year. Whether it's concluded this year, time will tell. But no, absolutely, we'll be taking some samples to do more met test work. That's a core piece of work within what I probably was trying to describe as the geology, mining, planning, metallurgy side of the feasibility work. It's an important piece. Yeah, we can't get that wrong.
With that, with what you're doing, with all that work, not the met work specifically, but with all that work they're doing at Ferguson, is any of that going to put the country's potential for geothermal energy in danger?
No, not at all. In fact, the western side of Ferguson Island has huge geothermal potential. It sits outside our tenement areas, but we do have a relationship through our through the largest shareholder of Adyton, Mayer Resources, we have access rights or an option to develop those geothermal projects on Ferguson. But of course, there's no point developing a geothermal project unless you have a place where you can put that energy into. And that goes for Fenny as well. Fenny's got huge geothermal potential. In fact, you know, I would probably contend that you could probably operate the whole of the Fenny mining infrastructure on geothermal. Lihir originally, I think, built 60 megawatts of geothermal, but they didn't reinvest in it and they've let it run down, which is, you know, I would think quite disappointing. So we see geothermal as a huge, huge opportunity to be able to effectively provide all the power for an ultimate project development on Fenny Island.
All of the power?
Yeah, I don't see why not.
Okay. Yeah. Is that what about capex for that energy? To get that energy.
I mean, of course, you've got to crunch all the numbers, but I think if you've got a geothermal source right beside you, it's going to be very, very competitive to any other energy source. If you're looking at bringing diesel in or heavy fuel oil, I think the geothermal is going to prove very, very competitive.
Okay. Yeah, that's definitely going to be. It doesn't happen all that much. That's why I'm asking. I don't know too much about geothermal myself, so it's going to be interesting to see it happening. Papua New Guinea has been historically unpredictable, I want to call it, when it comes down to politics, to political situation. How is that situation now? How do you foresee it in the future? What's going on politically?
Yeah, it's interesting. It's got that perception, and you raise it, Antonio, because actually, it's a democratic country now. It achieved independence in 1975, I think it was. Basically, Westminster system of government. I think it's had 8 or 9 prime ministers in that time. We often joke in Australia that Australia's had, more prime ministers in many more prime ministers in the same time frame as what we're talking about. So I think from a political stability, I would say that PNG's actually demonstrated quite good political stability. So in many ways, I think some of those statements are a little bit unfair around PNG. Look, it's had some challenges historically, hasn't it? I mean, look what happened at Bougainville with the great Panguna mine, which was operated by Rio Tinto. I mean, that's a long time ago now. But I think Bougainville and the learning from Bougainville is really the most important thing, and that is in PNG, whether you think you've got, or irrespective of having full political or national government support, if you have that but without local support, you will put your project at risk, and that's exactly what happened for Rio Tinto, or my interpretation. They certainly had central government support, but they didn't have the support of the local people, and ultimately the power of the local people led to the demise of that project, and it's still not restarted. And that's why I emphasised very early on around why did I go to Fenny Island and spend 5 days there and do community awareness, is because we need to make sure that we win the hearts and minds of the local people. We have them behind us and supporting us through the whole journey.
Good. Well, Tim, this has been a good overview so far. We're coming up on an hour here soon. What am I forgetting to ask you, though? What's something you came here hoping to talk about that I failed to bring up?
Look, I think you've covered, obviously the key aspects of Adyton and what its focus is. I think one of the things we probably didn't touch on, we had a much broader portfolio of tenements. If you looked at the tenements 3 or 4 years ago, I took the decision to really focus on where we saw the greatest potential, where we were really excited about the geology, and that's why we've ended up with Fenny and the Ferguson assets. And I think they're quite different. If you want to think about and intellectualize, well, what could Fenny be? We still see Fenny as a potential tier 1 asset. It might not be the next Lihir. It's different. Lihir doesn't show much copper, but we still see Fenny as definitely having the potential of a tier 1 asset. If you want to go and find elephants, you need to go where elephants live, right? And that's where we are. You're in an incredible discovery zone. You go, if you look at that island chain in the Lihir volcanic arc, you've got Simberi mine, 8 million ounce deposit. Next island southeast of Simberi is Lihir. the MRA website records it as an 80 million ounce deposit. Next island down is Fenny, question mark. Next island down is Bougainville and the great giant Panguna mine. So we are certainly in one of the most, one of the greatest discovery regions of the world for large scale gold and copper projects. If you then think about Ferguson, it's quite different. Ferguson's more of a Missima style deposit. It's never going to be a 5 million or a 10 million ounce, but it's probably every day of the week we're going to find 1.5 million and probably 2 million ounces. But what's attractive to it? It's shallow. It's going to be low cost. It's in a from an access point of view, it's easy access from a major centre, Alotau or Ley, and it's got fantastically supportive landowners. But it's not going to be your next Lihir. It's the geology doesn't support that. But can it support a 100,000 ounce a year project for 15 or 20 years? Absolutely, every day of the week. And there's nothing wrong with that.
Good. Well, let's see the kind of work you're going to do this year. I'm going to follow along with the story. Hopefully we can get an update soon. But this is a great conversation, Tim. Thank you so much for investing your time in me today.
Thanks, Antonio. I really appreciate for including me in this. And yeah, look forward to the next discussion.